Hey guys, this is Market Update. The bad news is that there's just way too much uncertainty around right now for us to pump. Good news if you're trying to accumulate, to be fair. If you look at MVRV, we're at 2 right now, which is, look, you have to be buying here. If you're looking to accumulate Bitcoin, you just have to accumulate when MVRV is low for sure. And so it's time to close your eyes. Don't catch a falling knife. All of that is nonsense, right? You just have to look. If you're a long-term investor, you're actually trying to accumulate. When MVRV is pretty weak, yes, it can get way weaker, but you have to accumulate. You have to actually go ahead and buy. If you're looking difference between 80, 75, 70, 60, it kind of doesn't matter if you've got a medium-term time horizon. This clearly isn't the top of the bull market, but the next 6 months or so is actually very, very uncertain. So I'll go over that in this video. If you do trade though, you can get a deposit bonus on Bybit, the exchange I use, down in the description below, up to 30,000. If you can't trade on Bybit, Apex is Bybit's DEX. You can just trade from your crypto wallet. You get a permanent fee discount and a deposit bonus right now on there as well. Link in the description. The problem with this crypto post is that it leaves more questions than answers. It feels like a pump and dump, right? There's no real policy here, and it's not gone through Congress, and it can't be enacted. Why list out a bunch of altcoins that the government shouldn't be buying, right? The government doesn't buy stocks, doesn't buy Mag 7, it shouldn't be buying a bunch of altcoins, right? It just doesn't feel right. And that's what the market has priced in. It's a pump and a dump. It's right there, a post on a Sunday evening, clearly from Eric Trump using his father's account, right? This is not what we want, right? Well, we're gonna find out on the 7th of March anyway. The first ever crypto summit is happening. And so let's see what exactly is gonna come from this. But the time for talking is over. The market is not going to price any of this. It's going to price real action, lawmaking, and show me the money, right? This posts on social media, it's not going to work anymore. To post about all these altcoins and then 45 minutes later post about Bitcoin and ETH, it's just strange. It's absolutely bizarre, right? The problem is as well is that it just feels like a scam. Bitwise, largest investor, David Sachs, who is the crypto czar, Bitwise top fund holdings just happen to be all of the assets that were held. It feels weird. It feels like a scam, and it's not fair. And so that's an issue, right? And so we have to get back to actual policy in the right way. And I think we will get there, and we'll course correct. But right now, the market is not going to give any time or any euphoria to anything like this. It's going to be solid lawmaking, and that takes a long time, and we're going to have to go through that. To be fair, as we're pulling back in a bull market, it's kind of great news. Buy this volatility to the downside, but these scam wicks aren't helpful. Hopefully we go a bit lower and we can start to dollar cost average in at decent prices again, and just wait for the next 6 to 12 months. Right now it seems we're in the post-election hangover. And I use those words because this is what Treasury Secretary Bessent said. We're seeing the hangover from excess spending in the Biden 4 years. Now they're going to say this because obviously they say everything's the fault of the previous administration, but to be fair, the previous admin literally spent more money than was ever spent on the fiscal side, right? So you're looking at huge fiscal deficits that have to be drawn down. Taking that away from the government and trying to get the private market to create that GDP and inflation is incredibly difficult, and it's not going to happen one for one. Some hopium here, though, is that you can look at Bitcoin here versus GMI Financial Conditions Index, saying this is a leading indicator. So this is saying maybe we find some sort of bottom for this drawdown over the next few weeks or months or so. So some decent hopium there. You just got to be consistent when the price draws down. We know this is the best, most desirable asset with the most growth when you're looking at large, indexes. The issue is to get a drawdown, right, in inflation and to reduce the size of government. That means that you're going to reduce GDP, reduce inflation, and actually spike unemployment a little bit. Well, that's what a recession is. And so maybe we have to go through some recessionary macro data first and some weakness in order to actually reset things and then go higher again. Well, you're going to have to go through this in markets. If you're an investor, over time, you have to go through these periods. It just is what it is. And so you can see, I think this is consumer spending. It's coming off a little bit. Well, you're going to have to go through this. If you cut government spending, cut GDP, cut inflation, rise unemployment in the government sector, which is 25% of GDP, you are going to have to go through a tough slowdown period first, before then maybe creating more investment, in the long run, sparking credit creation from banks, dropping interest rates. That's what we need. We have to go through this first. It's not all roses in the markets, is it? You have to go through these periods. Hints of momentum in manufacturing despite disappointment. We have a period of bad data coming up. Well, that's what we're pricing in, right? You can feel it. So you can feel we're pricing in that data. It's not terrible news. This is the issue, right? Is that this is the federal deficit. And it is insane, and you need to draw it down. We are running a historic deficit, 6.3% of GDP, never seen before outside of World War II, the global financial crisis, or the pandemic. If we weren't running this deficit and we had a balanced budget, GDP would collapse. That is correct, because GDP is a fake metric. It doesn't measure wealth. It measures the amount of fiat currency stimulus. It's a fiat metric. It's garbage, but it has to be positive. Otherwise, the fiat-based debt system collapses. And so we're in for a wild ride. But if you want to sort this out, you have to cut the government. You have to cut 25% of GDP down by probably 20, 30, 40% if you can. God knows if they're going to do it or not. But the other side, you have to encourage credit creation and the private market to come in. They're not going to happen at exactly the same time. We have to go through some weakness. This is a volatile market that we're in. We are not in the markets of the past where it's just all money printing and it's easy. We're going to have to go through this period, but you have to be here for it. If you want to make returns, you have to buy when there's some weakness in bear markets and during drawdowns in bull markets. I want to give you a little bit more hopium though. This is the Bitcoin price versus global M2. M2 did draw down. This is money supply around the world. You can see they're almost one-for-one correlated. Money supply did draw down, Bitcoin didn't. Now we've had it, and maybe over the next few weeks or month or so, we can actually start to bottom out of this drawdown that we've had, and then start to inflect back to the upside with global M2 as well. There's just a lot going on right now geopolitically, a lot of wrangling with tariffs, and so this all has to be sorted out. And then maybe after that, the dollar weakens a little bit, you get some more stimulus around the world, and that would be the rest of the bull market. If you do trade crypto, Bybit deposit bonus down below up to $30,000. If you can't trade on Bybit Apex, you can just trade directly from your wallet. Deposit bonus on here and 10% permanent fee discount by the link below as well. I'm James, this is Money DG. Cheers for watching, and I'll see you in the next one.